Welcome back, traders. This is part 3 of the video, as I promised. That I'll be giving out. I'll be uploading the part 3 video based on the order block secret. So now there is a case here which I've noticed almost most of the time. This is the best of the best. This is why I put it as part 3, right? Because you need to learn part 1, part 2. This one is the best. This is the best because on part 4, I'll be showing you how to spot these things in the chart, right? This is the best of the best, right? In this case, you have this order block here. What you need to do, you need to always employ or apply all the categories, all the rules for you that will enable you to be able to do what? To check the validity of an order block. To test or rather test the validity of what? Of an order block. So in this case here, you need to be very, very careful when it comes to testing an order block. You need to be very, very careful because you have this order block here, the buy to sell, which was supposed to be mitigated by this candle here, and it was not mitigated. You also have the sell to buy. You have 2 order blocks now. In some cases, you have, okay, you may have an order block here and also order block here, right? So maybe if I can shift this one, if I can shift this one and put it here. And this one has to come here. All right, guys, it won't be perfect, but at least I tried. You see here, you will have something like, we call this one here a break of market of order block, a breaker block, this one. But here is the secret. Here is the secret. Maybe I have to delete this one for you to understand this thing. I have to delete this one and put this one here. All right, let me just leave it like this. All right, so we have something like this. You know that this is an order block. You mark this one. Let me try to mark this one using the correct color. Mark this one. A style, extend to the right. Then I come here. This one. And then on this one. All right. So you are now marking this order block because it was tested and it is valid. You have to test this one and also test this one here. Right? What does this mean? If you go down to smaller time frames, like this is one, let's say this one is a daily time frame or 4-hour time frame. I'm just making an example. Let's say this one is a daily time frame. Or let me make an example with 4-hour time frame. Let's say this one is an order block on 4-hour time frame, this one here. And here, this one is on the same time frame. This sell to buy order block. Right? You will see the price doing this thing. Inside here, when you go down to smaller time frames, you'll see a consolidation. You'll see the price consolidating like this. Consolidating like this. And we'll take out the lows and then shoot up. Right? So this one was a reaccumulation. You'll see an order block here. This one is a reaccumulation because in the reaccumulation is created inside a supply zone. Reaccumulation, if it's created inside the supply zone, it means that that supply zone is going to be broken. the price will not sell from that supply zone. It will rather buy inside the supply zone. Let me repeat that. If the price is reaccumulating inside a supply zone, which is this one, the buy to sell is a supply, the sell to buy is a demand. The buy to sell order block, I also call it a supply zone. The demand is the sell to buy kind of stick. I also call it a demand zone, a sell to buy order block. The buy to sell order block, I call it a supply zone, right? So when the price is starting to consolidate inside a supply, we need to go down to smaller time frame and check what is happening. Is the price breaking the structure to the downside or to the upside? When you see the price, or on a 5-minute time frame, you see the price doing something like this, breaking the structure, coming back down, breaking the structure, you must know that this supply zone, this breaker block is likely to be broken, to be violated. That is what I'm trying to say. If the price reaccumulate inside a supply zone, the price is likely, this order block here is likely to be broken. Once the price broke this order block here above here, you must go down to smaller time frame and see what happened inside this zone here. You will be marking this zone on the 4-hour time frame, and then you go down to smaller time frame, 5-minute time frame, 15-minute time frame, and see what actually happened inside this zone here. 5-minute and 1-minute time frame is fine. 15, 5-minute, 1 minute. Those 3 time frames, if you're on the 4-hour time frame, if you want to see what really happened inside here, you will find out there's an order block inside this zone here, inside this supply, which sponsored the price to be broken like this, which sponsored this strong move to the upside, right? This is what I'm trying to say. You will be looking you'll be looking at the 4-hour chart. And then you will see these things on the 4-hour chart. So when you see that the order block that you have marked has been broken, you go down to smaller time frames with this zone marked on the 4-hour time frame. Then you go down to 5-minute time frame, you check what really happened inside this supply zone here. If you see order block there, that is the order block that caused the market to break here. This is the order block that you see inside, that you will see on the 5-minute time frame that broke this supply. The price is likely to come there. Let's say this was the 5-minute time frame order block. I was doing this, took the liquidity, creating an order block here before we see the shoot to the upside, breaking the supply here, breaking this supply here, right? On the 5-minute time frame, this is what you're going to see. You will see something like this. The order block will be here. On the 5-minute time frame, you will see something like this. When the order block is being broken, you will see an order block on the smaller time frames. You will go ahead and mark this order block like this, because you don't want to wait for a long time. You don't want to wait for the price to come here, only to find out that the price is not coming here. It will just come here, to just come down here, mitigate this one, and then shoot to the upside, and not come here, right? This is the first scenario. The second scenario is this one. The second scenario is this one. I'm going to delete this one. The drawings. Okay, so now the first scenario is this one. Let me try to delete this one, this candle here. Also use this one. I want to use this one. You'll see that the market just shot up like this, shot to the upside like this. This is another scenario. And then you have to ask yourself a question. Why was this order block broken? Why was this order block broken? What caused the price to break this order block here? What caused the market to break this order block here? The answer is down here. It's because of this order block that you see here. Yes, there's something here, inside here. There's something that happened also inside here. Meaning the price can come back down like this, mitigate this one, and shoot to the upside like this. Buy. It will finally come back down here. Right? It will give you that small buy because of this strong zone. Buy up until somewhere here. That it will eventually come back for the mitigation of this order block and then shoot to the upside. What does this thing mean? What does this mean? It means that for the market makers to break this order block here, this buy to sell order block, because they used, let's say maybe they used 100 lot size here. They used what? 100 lot size here. The lot size was 100 lot size, right? 100, they've used 100 lot size when they were introducing this bearish order block. They used what? Just an example. They've used what? 1 million lot size. The 1 million lot size. I'm just making an example. It means that if they want to break this order block, this one, they have to use the bigger lot size. The lot size that they have to use here, that they are using here, it has to be bigger than the one that they used when they were introducing the supply here. When the market maker was introducing the supply, they used what? 1 million lot size. If they want to break this supply here, this order block here, they have to use more bigger lot size than the one that they used here. They have to use bigger lot size than the one that they used when they were introducing this supply here, this order block here. This order block was introduced by 1 million lot size. On this order block here, there is always an aim of why they are introducing a certain order block. Now they introduce this one to push the market lower. Now they are introducing this one to do what? To break the previous order block that was introduced. It means that they have to use 2 million lot size. The lot size that they are using here is to be bigger than the one that they are using here. Let me then put it here. 2 million lot size. There they used 1 million lot size to push the market lower, and here for them to be able to break this order block here, this bearish order block, they have to use more bigger lot size. They have to use more lot size here, the bigger lot size, for them to be able to break the previous supply. I want to show you that they need to come back here because there's so many orders that have been opened here, right? Because of the lot size that they used when they were introducing the sell to buy order block. This one is bigger than the one that they used here on the buy to sell order block. So they have to push the price here for the mitigation of this order block here, because the orders are too many. There are too many orders here on this order, on the sell to buy order block, right? So they have to push the price to the downside, mitigating this order block here before you see the push to the upside. Let's say here the price is currently inside this order block here. You must wait for the price to come inside this order block here. You have already marked your 50%. You have already marked your what? Your 50% of the order block. So what we have to do is this. The price is already inside the higher time frame order block. The price is already inside the higher time frame order block. You need to go down to 5-minute time frame. need to go down to 5-minute time frame. Go down to 5-minute time frame. 5 minutes time frame. Right? You go down to 5-minute time frame from the higher time frame. You are going there to look for break of market structure. That happens after the mitigation of the higher time frame order block. On the 5-minute time frame, we'll see something like this. The price will leave an order block here on the 5-minute time frame. Remember that the price, when the price was coming back down, it will come like this, like this here. You still apply the rules, the RSI rule. I'm not going to go back there. You already know that. And then here, the price will be leaving an order block here, right? We'll leave an order block there. Go to part 1 video. You'll see how to trade the price when it reaches the order block zone. Then you'll be waiting for it to come back here. You take your trades here. Maybe you'll be taking 2 positions. Your first position would be like this. Your first entry will be like this. Will be below this low here. Then you take it to the upside, right? Will be below this low here of the 5-minute time frame. Because the order block is here. But the stop loss will not be according to this low, will be according to this low here. All right. The second trade will have a bigger stop loss. The entry is according to this break of market structure according to 5-minute time frame. The stop loss here is according to the higher time frame order block. And then you target above. Right? This is how your trade will look like. It will look like something like this. All right. Why is it so important to wait for break of market structure on the lower time frames? Let me show you this. The market makers have introduced this thing. They do this thing now. Let me show you. Let's say this one is an order block. Right? And then here, this is the bullish order block. I'm teaching about bullish order block. So what I'm saying on the bullish order block, it applies in the same way on the bearish order block. You apply it in the same way on the bearish order block. Doesn't mean that here I'm teaching on the bullish order block. I don't want to waste time. Everything that I said on the bullish order block is the same thing even on the bearish order block. So you see here, you will be seeing the wicks here. This is the order block. The wick here. So we already know that the order block is valid. We have tested it. It is 100% valid. But the market makers, they do these things in nowadays. The price would be coming down like this, like this. They will do this. The price will go below this and then come back, close inside 50%. Right? They will do this. Why they do this thing? When the price is, when this candlestick is moving to the downside, it will be moving like this. Going forward, back, front, back, front. They are closing orders like this. Back, front. This is what you will see. Back, front, and then it will finally push to the downside. Why they are doing this thing? The answer is this. You see this kind of stick here. I'm not gonna use many kind of stick. I'm going to just use this one. It won't happen like this, but there will so many, the price would have so many candlesticks here that are going up to the upside. If the price has gone up like this, what do you think it happened? What do you think happened here? Think of someone who bought here. Think of someone who bought here. Their stop loss is below this low here. Their stop loss is below this low there. So I told you, I once told you that the market makers, they go from liquidity to liquidity, from order block to order block, from support to resistance. That's liquidity. That's liquidity. Support and resistance is just liquidity. So they go from liquidity to liquidity, from order block to order block. They take highs and lows. They take out highs and lows, right? So they understand, the market makers, they understand that someone who bought here, he was deeply in profit, who bought here. He or she made a lot of money. The stop loss, the retail stop losses are underneath here. They understand that. That is why they do this. They start by closing their orders. We see the price going up and down, up and down, up and down. The price breaking the structure on 5-minute time frame. The price will be going up, down, up, down. They are closing their orders up, down. Then it will finally push to the downside, grabbing liquidity underneath this low here. On the 5-minute time frame, you will see this. You will see the price doing this, breaking on the 5-minute time frame, breaking the structure like this, breaking the structure like this. But what will happen? You will see the price coming back down like this. This move to the downside was moving down to grab liquidity underneath this low. Don't say to me that how, because the price was already breaking the structure, it broke the market structure according to 5-minute time frame, according to smaller time frames. Don't say that, because if you apply the rules correctly, you will know that the price is still going to come back here. I told you that even on smaller time frame, you have to see divergence on the other side. The other side is to show you this thing. Right? There's a divergence on the other side. The other side is going up, the price is moving to the downside. There was no divergence here when the price was here. Look here, this is just higher high, and on the other side, there's higher high as well. On the smaller time frames, you also consider the RSI divergence. There was no divergence at this point. The price, yes, the price was breaking the structure to the upside as it broke the structure here, but divergence was not there. And then when the price shot to the downside like this, grabbing liquidity underneath, that's when you start seeing the divergence. The divergence started to occur at that time when the price was shooting down like this. Now we have a divergence, the price is going down, the other side is going up. Then the price will then leave an order block here on the 5-minute time frame, then shoot to the upside like this, coming back down here on this order block here. It will then finally shoot to the upside. This is what is going to happen. Right? I hope this one is clear. I'm not going to dwell much on these things. Let me explain, let me show you another thing. So this is the final thing that I'll be talking about here. The price is moving to the downside like this, moving up, moving down, moving up, moving down, moving up, moving down, moving up, moving down, sorry, moving down, moving up, moving down, moving up, the first break of market structure. The first break of market structure, what you need to do is this one. You mark the break of market structure. It doesn't mean that the price is going to go higher, going to come back here and then go high. You also employ your RSI divergence, the divergence. You see the RSI is going up like this, going up like this, going up like this. You see there's a divergence already. Right. Now we have this order block here. All right. You still need to go down to smaller time frames and see what is happening according to smaller time frames. Right. We are marking your order block. Marking your order block. Like here. This is the order block. Now the price is coming back down. Again, the order block is here. The price is coming back down. Here. Going up, breaking the structure once again. You'll find out the price is not gonna always come back here. It came back on this area here. It doesn't mean that it will come back here. Okay. You see, there was a supply here. The supply was here. The supply was here. The price cannot just go to the downside. It starts by introducing the supply on this high. The supply on this high before it tries to go down. Before the price tries to shoot to the upside, it would introduce the demand here. The demand would be here. If the price decides to shoot to the downside once again, it will start by introducing the supply. It is simple as that. It is simple as that. So the price will then, so on this case, you'll find out that there is an order block here. Right? This is the order block that broke this supply here. That led the price to break this supply here. They say there was an order block also here. Then the price introduced another order block here or demand, and then it shot to the upside. So this is the order block that broke this supply. That's that order block that was here. This is the demand that broke this supply that was here. Or this is the order block that broke this order block that was here. It was supposed to be rejecting here and then go low, but it didn't do that. Just it introduced the demand here and then broke above this order block here. So the price is likely to come back on this order block, which you see, which led the market to break the previous order block here. Then the price will then shoot to the downside, mitigating this order block on and not come here on this one, and then continue moving to the upside, coming back down, going back up. This is what you must take note. Right? So this is the end of this video. I'll come back and I'll come back on the part 4. This is where I'll be showing you all these things, since from part 1, part 2, part 3. On the part 4, I'll be testing these things with you. I'll be showing you these things in real time. Right? So, but this is the end of the part 3. I'm done with part 3 video. I'll come back with part 4. On the part 4, I will then show you all these things in real time on the chart. I'll either go to NASDAQ, USD, GBP, any pair. I'll show you these things in any pairs. So thank you so much for being with me this far. No, don't forget to subscribe. Those who are not on my Facebook group, just check the link below on the description. You check the Facebook link and then the Telegram link there. But thank you so much. This is the end of the video. Let's meet again on the part 4 video. So thank you so much, good people. Like, subscribe, share the video with everyone. So until next time, we'll see you on the next video, part 4. So where I'll be testing these things. So thank you so much. Peace.